Guys, welcome back to my channel. It's Aqua FX again. Today I'm here to show you how you can use just 2 daily candles to enter a trade. This is going to give you a bigger high. It's going to increase your win rate. This happens when you stick to the rules. So let us go to the chart. So let's go to the chart together. Let me show you how you can implement this strategy step by step. Do well to subscribe to this channel. Turn on notification bell for more videos to come. Let's go. So guys, for this strategy I'm going to be using USD JPY. I'm on daily charts. Like I said, 2 daily candle is what we are going to be trading. But at first, let me explain how you can spot these 2 candles before we know the next thing to do. So make sure you subscribe. So first, you will see this candle. A candle will open. A daily candle will open this way. And another daily candle will open this way. This is to say, if the market is bearish, you have to wait for this thing to happen before you take a trade. If the market is bearish, because you have to check the daily trend, you can't just go to the daily chart and take the trade randomly. If not, you are going to lose a lot of money in the market. So another thing is, if the market is bullish, you'll be looking for this. Even if you are opportune to take only 1 trade in a month, you are okay. So this is what we are going to be looking at the chart. We're going to wait. Once we check the trend of the market, which is the daily chart, like I said, this is just 2 daily candles that you are going to be making use of. So if your daily structure is breaking structure to the upside, this is what you should be looking at. This pattern is what you should be looking at. You should be looking at a bullish candle followed by another bullish candle. But this very bullish candle, you see that it grabbed the low of the previous day candle. It grabbed the low of the previous day candle. Upon this market bleaching the low of the previous day candle, this is when you look for your entry criteria and take this market up to the upside. Then this very one, it's a bearish scenario. You have to check the daily chart. If it is breaking structure to the downside, this is the pattern you are going to be looking at. You will see a candle closing bearish followed by another candle that takes out this week of previous day candle. Then this is where you are to take your trade. Look for your entry confirmation. Take your trade from this level down to the low side. So this is all you need. Let's go to the chart. Let me show you step by step. Don't forget to subscribe, turn on notification bell, and stay tuned for more videos to come. So let's get to the chart. Right now I'm on my daily chart using GBPCHF. I'm on my daily chart. So once you come to your daily chart, the first thing you are to look for, so that you will not go against the trend, it's better you go with the bigger time frame, is for you to look for the trend of the market, if it is bullish or bearish. So on this market, we've seen that the trend of this market is bullish. How? Let us mark it. So we've seen this market coming back like this. It pulls by this candle here. It pulls by this candle. and it goes back down, and then coming back, pulling back right here, and then break structure to the upside, push back, and still break structure to the upside. So we've already know that the trend of this market is bullish. The trend is bullish. The trend is bullish. So the only thing we are going to be looking at in this market is for us to take a buy trade. For us to take a buy trade. So now, since we know the trend of this market, it is now for us to identify our candle. It's now for us to mark out our candle. So right here, we've seen that the two candle pattern we are looking for, we've seen a candle here that has a wick here. It has a wick right there. And we've seen a candle that closed below this wick. We see a candle that closed below this wick, which is this one here, this wick here. So for you to trade this wick, it is for you to go to a smaller time frame like M5. Once you go to your smaller time frame, this is what you are going to be looking at. You are going to be looking for something like this. Upon retesting this zone, you take the trade to the upside. In this point now, you look for a break of structure on a smaller time frame like M5. So once the market come into this zone, you look for something like this, a shift in market structure. So upon retesting this zone, this is where you are going to place your trade. So that is what we are going to be looking at in a smaller time frame. So this place will be your number one entry, but let's keep looking again. We see that this candle here has a wick right here. The candle has a wick right here. This candle right here, this one. This candle, it has a wick right there. And this very candle came and bleached. It wicks the low of that very candle. So it is the same thing you are going to do. You mark the wick out. Note, this has to happen during London section. It has to happen during London section or New York section. So once you mark the wick, once you mark the wick out, it is for you to move down to a smaller time frame like M5. Once you go to M5, you look for that pattern that I'm telling you about. So let us go to our M5 together. So please guys, don't forget to subscribe to this channel. So we are going to our M5 together. So guys, now here is the zone that we mark. You've seen, that is the line we mark. That is the what we draw. That is what we draw out. This was the first one. This happened during London section. If you can check properly, this was the line we mark, and the first one. Let's move it to a line chart and see. You see, on this line chart, we've seen a break of structure from here. We've seen a nice break of structure from here. You've seen that this leg was able to break this structure here to the upside. That was the first one we marked, to the upside. So as it break it to the upside, it's for you to look for that last bearish candle that lead to a break of structure to the upside. You turn it back to your line chart. You've seen the last bearish candle is this very one. Where is it? Is this one? Is this one here? It is that one. It is that one there. So once you mark that out, you use your long position. It is because, oh, For those of you who don't know how I got the indicator that I'm using, let me go so that I'll show you how to add the indicator yourself. So you go to your indicator. So you go to your indicator, you click on indicator. Once you click on indicator, you click sessions, you type sessions, So once you type in sessions on your indicator, you will see sessions in bracket logs algo. Sessions in bracket logs algo. So once that is done, you click on it. The reason why I'm not clicking on it, it is because the indicator is already on my chart. So you click on it. So once you click on it, you click on that indicator. Once you click on setting, the interface will open. Once you click on the indicator, these three dots there, the interface will open. You click on setting. So once you click on setting, you try to set your time. You see London, you see New York. Since you are interested on only New York and London section, you click on New York. So the time I'm here in Nigeria is from 1 p.m. to 5 p.m. Nigerian time is my New York sections, which is from 1, which is 13 to 17. 17 is 5 in Nigerian time, local time. So at your own end, you can set it like that. 1 p.m. to 5 p.m. is the New York sessions. Then once I click on the New York, I'll click on the range. I'll enable the range, so it will be on my chart. So the second one, I will click on London session. I will type on the time. Once I type on time, this very place at the left that looks like our keyboard, I'll click on it. Once I click on it, it will show me time. Then I'll put my time here, which is 7 a.m. Then after 7 a.m., that is in the morning, I'll click on OK. Then I'll click on this side too. I'll click on this thing that looks like keyboard. Then I'll set it to 11 a.m. 11 a.m. is still in the morning. Then I'll click on OK. So after which I set it out this way, I'll click on OK, meaning this thing now will be on my chart. So after which I've done that, I have to close the interface. Once I go back to my chart, the indicator is on my chart. Thereby, you enable it. So once you enable the indicator, that is when you are going to be looking for your entry during London or New York section. You are not going to trade during Asia. So after London, you can look for setup. After New York, after London, you can look for setup. After Asia, you can look for setup, because after Asia, you meet London section. After London section, you meet Asia section. So you look for your setup. So I'm going to place the trade right there. The stop loss will be below the zone, and I'm going to target let me say 1 to 10, 1 to 15, or 1 to 20. All depends on what you are looking for. So as you can see, during the London here, for those who trade 2 sessions, during London here, we've seen a break of structure to the upside. The first trade was a loss. Then after the London section, we've seen another break of structure, which broke hidden structure to the upside. Check it properly. It broke hidden structure to the upside. Then if you place your trade, you lose 1 during the London, and during the New York section, you were able to make something out. Like you see, 1:15. Let's just say 1:15 right there. 1 to 15. That is our 1:15 for the first entry. So let us go to the second entry that we drew. Let's go to the second. let us go to our second part, which we marked. So guys, the second part is this one. You can see where I mark here. So guys, don't forget to subscribe. Don't forget to subscribe to this channel. So that is our second point, which is this one here. This is our second point that we drew. This one happened around London section itself, not after London section. This one happened around London section. Let's turn our chart to a line chart to us to see possible break of structure. So you can see as that market come into this daily line that we draw, after this daily zone that we mark, the week of the daily zone that we mark, we've seen a break of structure right here. There was a break of structure right here. So upon this market breaking structure to the upside, you turn your chart right now to a candle. So once you turn your chart to a candle, you get this candle right here, which is the last bearish candle before the market breaks structure to the upside. So you mark this out. You mark this candle out, which is this one. As you can see, the market was able to come inside this candle too. It was able to come into this candle, which is here. So you are placing your trade right here. You are placing your trade right here on this candle, and your stop loss will come below, and you target 1 to 10 or 1 to 15 as well. You go for your 1 to 10 or 1 to 15. So you've gotten your 1 to 15 right there. So tell me if this strategy doesn't worth it. It worth it. No matter how the loss is. How many times you take trade in a month? You can take trade 15 times in a month, or let's say 20 times in a month, and you lose. You can take trade up to 20 times. Let's say you take trade 15 times and you lose 13 times and you won twice that month. With 1:15 RR, you are okay to go. 15 minus 10, you know, you are still in profit. The 5 plus 15, that is 1:20. You've put down 20 RR at the end of that month. So this is how you can implement this strategy step by step. So please guys, don't forget to subscribe to this channel, turn on notification bell. If you are learned something from this very tutorial, please put it down on the comment sections. I remain Aqua FX as I sign out. Peace.